Welcome. In this video, we will see if Xcn coin can make a new ATA. Please watch to the end to understand and not to miss it, friends. Looking at the chart from a broader perspective, there is a distinct falling trend line extending from the top area. The price has been moving below this trend line for a long time and has so far failed to break through this level. This suggests that the selling pressure is still there and buyers are not strong enough. If the price wants to start an upward movement, it first needs to break this falling trend line strongly. This is because falling trend lines indicate the general trend in the market, and as long as the price stays below this trend, it means that the downtrend continues. However, if the price breaks through this level and stays above it, this could be the beginning of a bullish breakout. In order for this breakout to happen, you first need to see a strong bullish move with volume. This is because sometimes the price can break above the trend line and then move back below it. This is called a fake breakout and can mislead many traders. Therefore, it's important to see a few candle closes when breaking above the trend and confirm that a bullish breakout with volume has occurred. If the price breaks the falling trend line and stays above it, then we can understand that buyers are gaining strength and the market is now looking to break out of the decline. In particular, a retest after the break of the trend and a continuation upwards would make the uptrend healthier and more permanent. If it makes this move, it will be one step closer to making a new high. But it's not enough to just look at trends. Let's look at other metrics. When we analyze the price action according to the Elliott wave theory, we see that the first and second waves have been completed so far. The first wave appeared as the beginning of an uptrend, and then the price entered a correction with the second wave. At the moment, the market seems to be nearing the end of this second wave, and if there is a strong reaction from here, the third wave will begin. The third wave tends to be the strongest and longest lasting of the Elliott waves. Generally, this wave is known as the one where traders and buyers show the most interest, and the price makes the sharpest rises. This is because by this stage, the market is already in a strong uptrend, and buyers' confidence is growing. This is why the third wave usually has the most momentum. If the price makes an upward bounce from the current level, this will be one of the most important signals confirming the start of the third wave. However, it is important to note that the second wave should not fall below the starting level of the first wave. If the price dips lower in the second wave, then the Elliott wave structure is invalid and the analysis should be reevaluated. We can use Fibonacci levels as the target of the third wave. According to the Elliott wave theory, the third wave is usually 1/618 times longer than the first wave. So when we make Fibonacci measurements, we can say that the minimum target of the third wave should be at 1/618. However, depending on the market momentum and volume, the price may go to higher Fibonacci levels. Looking at the most recent candle that is currently forming on the chart, we can see that the price is trying to form a bullish engulfing candle pattern. This pattern is generally considered a strong buy signal, indicating that the downtrend has ended, or at least a short-term uptrend may begin. A bullish engulfing candle occurs when a green candle forms that is larger than the previous red candle. This is a strong sign that the market has now switched from sellers to buyers. If the current candle closes at the current levels or higher, this pattern will be completed. In this case, it is quite possible that we will see green candles continuing upwards in the candlesticks ahead. In addition, the volume is also of great importance for the reliability of this pattern. If this bullish engulfing candle is formed on high volume, this indicates that the uptrend may be stronger and lasting. However, a bullish engulfing candle on low volume could be a sign that the uptrend may remain weak. So, how can price action proceed? If this bullish engulfing candle holds and the candle closes above, there's a good chance that the next candle will be green. This is because bullish engulfing candles usually represent the beginning of a bullish breakout and indicate that buyers are dominating the market. The price may then first move towards the nearest resistance level. If the price can reach this level and hold there, we could see the start of a bigger bullish wave. And if it can break the downtrend after the uptrend, we could see even bigger uptrends. The area where the price is currently located is the level of a bull order block that has seen a strong reaction in the past. The fact that the price has fallen this far raises the possibility of buyers re-engaging. However, so far, there has been no clear reversal from this area. In order to understand whether the price is really going to make a reversal from here, we need to look at candlestick patterns, and we have just looked at this pattern. However, just one candlestick pattern may not be enough. Volume also plays a critical role. If the trading volume increases significantly while the price is rising, this indicates that the upward movement may be stronger and more sustainable. Otherwise, if a low volume rally occurs, it may be a weak reaction, and the price may test this zone again. The fact that the price is currently lingering in this area suggests that this is a strong support area. Usually, the price may not react immediately in such areas. It may consolidate for a while and create a balance of buyers and sellers. If a strong breakout comes from here, the price will first need to break the falling trend line. Breaking this trend and holding above it is critical for the uptrend to continue stronger. It is necessary to watch the reaction and act accordingly. The bull order block in the area where the price is currently located is an area where it has not received any reaction in the past, so the chances of a bounce from here are quite high. The fact that the price has fallen to this area increases the likelihood that buyers will re-engage. However, although there has been no clear return from here so far, it is observed that the price is in the process of forming a base here. What is important at this point is how the price will react from here and whether an upward movement will come. If a strong reaction comes from this area and an upward movement begins, the falling trend line will first need to be broken. Breaking this trend will be a critical point for the continuation of the uptrend. The falling trend line often acts as a line of resistance that keeps the price suppressed, and if it is broken to the upside, it can be said that the pressure on the price is reduced and buyers gain more strength. The thing to note at this point is that it may not be enough for the price to just break the downtrend, because sometimes the price breaks the trend line, but it may sag below it again because there is not enough volume support. That's why it's also important to observe how the trading volume moves when the trend breakout occurs. If the trading volume is high during a trend breakout, it means that the breakout is healthier and stronger. Otherwise, if a breakout occurs without volume, it could be a fake breakout, and the price may move down again. If the price bounces off the bullish order block and breaks the downtrend to the upside and confirms the breakout, the bullish movement may accelerate. In this scenario, the first target of the price will be the bearish order block above. Since the bearish order block has worked as a strong selling zone in the past, it will be very important how the price reacts when it comes here. And it will be difficult to break the bearish order block the first time. Looking at the RSI indicator, it appears to be forming a downtrend in line with price action. The RSI is an important momentum indicator that helps us identify overbought and oversold zones. Currently, there is a clear downtrend on the RSI, which is adding to the pressure on the price. This falling trend line needs to be broken to the upside before the price can start a healthier uptrend. Such falling trend lines often act as resistance. This means that every time the RSI approaches this line, sellers may have stepped in and prevented the price from rising further. However, if the RSI breaks this trend line to the upside and manages to stay above it, this indicates that the market momentum has shifted and buyers are gaining strength. This is an important signal that could support the upward movement of the price. And when the RSI breaks the downtrend, the price will break the downtrend. The vortex indicator is one of the important indicators used to determine trend direction. In this indicator, the blue line indicates that the price is in a bullish trend, while the red line indicates that bearish pressure is prevailing. Looking at the current situation, the red line has been on the upper side for a long time. This means that the market has been underselling pressure for a long time, and buyers have not been able to gain enough strength. When the red line on the vortex indicator stays on the upper side for a long time, it is a sign that the downtrend continues. This means that sellers are still dominant, especially if price action supports it. It is important to note, however, that extreme levels on such indicators can eventually signal a reversal. So, if the red line has been on the upside for too long, it could be a signal that the market is getting tired and the trend could turn. If the blue line initiates an upward movement from below and crosses above the red line, this indicates that buyers are gaining strength in the market. Such a crossover can be interpreted as the beginning of an uptrend. However, volume should also be analyzed during the crossover. If the volume is increasing as the price starts to rise, it means that the rise will be healthier and stronger. When the blue line crosses the red line, the price is one step closer to the 88th level. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.